Hello, it's Robert Miner with Dynamic Traders Group with our DT Trade Strategies video for the week of November 9th, beginning this Monday. This is a brief video, much briefer than what we prepare for our normal subscribers, but we highlight one or two markets that might be in an interesting trend or reversal position for a specific trade strategy for the next week. And we make these for our Twitter, YouTube, and DT News followers and subscribers. So I hope if you like what you learn here, you'll check out our regular DT reports. We do have a 1-month trial available for $19, depending on which report you choose. Okay, let's get started and take a look at a couple of our favorites that we look at frequently, and want to take a look at the stock indexes and gold. Let's take a look at the S&P to begin with. This is the S&P Cash. Of course, all the indexes follow about the same trends and reversals. And just to put things in context is, number one, I want to remind you that we're looking to trade, not to forecast, not to guess what the future is going to be, but identify conditions with a high probability outcome and low capital exposure. For instance, put a little bit of the recent activity in context. Back here in the middle of October is with our Trade Alert subscribers and our DT reports, we had a go short, specific go short recommendation. And just about 3 days later, we covered 1/2 of that position. Now, you always want to trade with multiple units, at least 2 units. And generally, you take a profit if the market moves in your direction relatively quickly with one of the units, and the other you keep the stop fairly far from the market in the event that the trend continues as anticipated. Well, that's exactly what happened over the next week or so, and we exited the second unit on this past Monday, the 2nd. So why did we exit the second as opposed to just bringing the stop up? Well, there's a couple reasons. And the first reason we're looking to at least adjust the stop, if not exit quickly, was that we were in a dual look-back oversold position with our DT oscillator, which is usually in a position that means we're about to make a daily low that's going to last at least several days. Now, typically, because the weekly momentums and the weekly trends appear to be bearish, is that I'd still keep the stop away from the market. But again, we're doing trade strategies, and the reason I recommended we bring it close was simply because we were coming in to a week of what could be some very volatile news events, mainly the U.S. election. So we trended down hard into that early part of the week, into that election. So my recommendation was, boy, we've got a nice profit. We're in a position with a dual look back oversold in our daily momentums. This would be a good time just to exit. And then if we make just a typical simple 3 or 4 day correction within a bear trend, we'll have another opportunity to enter the market. So we exited the market, and I'm emphasizing trade strategies here. Nice profit on both of those units for the whole trade. And instead of just having a 3 or 4 day typical correction within a bear trend, boy, well, we all know what happened last week. Just shot up from the election day after and right into Thursday. Very substantial advance. And we exceeded what was a bull reversal, a price level, and that's right, was right here. I'm going to make that thick. And as I had with my subscribers, and I mentioned this, I think, in last week's video, is if the market should come up and make a close above the October 19th close in any of the indexes, it would indicate that we're not in a bear trend and that this is probably a corrective decline. Well, that's exactly what it did. So yes, did not capture this advance, captured almost all of this decline, didn't capture the advance. We don't get every trend, our counter trend. But it gave us a real important piece of information here on Wednesday when we closed above this level, is that more than likely, regardless of the weekly momentums, they're still bearish, but regardless of that, rather than continuing a bear trend, more than likely will be more kind of sideways for a week or two while that bearish momentum, weekly momentum, continues instead of an impulsive bear trend. So that's all speculation. Where are we at right now? Is there a trade to be had? Well, as of Thursday was the ideal day to make a daily high. A daily high is a high that lasts for several days, and following a daily high, the market would be sideways to down for at least 3 to 4 days. That's typical. So we haven't had that reversal signal yet, but we certainly stopped dead in the water on Thursday, the ideal time target for the high, and our daily momentums as of Friday were dual look back overbought. So again, if we haven't completed a daily high on Thursday, we should early next week and probably by Monday. So just a lower close on Monday, close below the Friday's close, will indicate we've completed a daily high, and then we'll probably be sideways to down for 3 or 4 days. Now, is that a tradable reversal? Well, that's kind of that's your choice. It's not an ideal one. If you're good with short-term entries and relatively short-term trades, you should consider it. But because we have avoided the obvious bearish higher time frame trend, is that we have a pretty good probability that that'll be more sideways than down. So here's what I'd be looking at in the days ahead as a higher probability setup, and I'm not sure it would be made next week. So the first thing we want to know, probably beginning early part of the week, sideways to down for at least 3 to 4 days. And then what we'll be looking at in the days ahead will be the next daily momentum bull reversal, and if that's made above a bearish continuation signal. Now, we can't determine the bearish continuation signal until we've confirmed the daily top. So we'll be able to figure that out in the first of the week. But basically, just look at this over the next week, and your next whatever momentum, daily momentum indicator that you use, the next bullish reversal, the next setup when it's in a position where we usually make corrective lows, if that's made and we're above, let's say right for now, if we're above, let's say 62% retracement, that's going to be a setup on the long side for a potential continuation to a new high. So that's all kind of guesswork. We'll always play it by ear, and the most important thing is right now, keep in mind the immediate upside is probably pretty limited before we complete a daily high. And of course, in our DT reports, we update this every day because those levels can change slightly every day depending on where exactly the price is when we make those reversals. Okay, let's take a look at gold, because that was an exciting event that we had this past week and not unexpected. So here's the gold weekly data, and boy, you can look at this, and boy, what an up week it was. What's significant about last week is when gold traded above the recent swing highs and made a weekly close above those highs. That itself is pretty bullish activity, but here's even more important back here on the 8 weekly momentum. After the prior week making a bear reversal, it flipped right around to bullish again this past week. We now have a triple look back bullish weekly momentums. So the 8 is bullish, and the 13 and 21 are both bullish from the oversold zone. That's a pretty good position to indicate that the trend of gold is going to be sideways to up for at least another 2 to 3 weeks. So it doesn't mean we just blindly throw money at it, as we identify specific trades set up to take advantage of that information. So here's the daily data. And again, it clearly shows how we've exceeded those prior swing highs, closed above those swing highs. However, the daily momentums reached overbought, a similar position where it makes highs that last just a few days. Sometimes those highs last a few days and just sideways, but it's not a good time to enter a position. It's going to be a fantastic time to enter a position if in the days ahead, following the next daily momentum bull reversal, if gold has not closed below 1896.20, that's going to be a great setup on the long side with minimal capital exposure. So I have no idea how this is going to play out, but what I do know is I'm able to now identify a specific set of conditions from which then I develop a very specific trading plan with a specific price to enter and a specific capital exposure, meaning a specific initial stop loss. So we're very near a daily high. The daily momentums are overbought, and the maximum time for a daily high should be on Monday. In the past few months, we've had high to highs around 18 to 20 days. Monday is day number 20 from the high back in October 12th. So again, with the daily momentums overbought, it's not the time to buy on this breakout. It's definitely a time to buy when we make the next minor correction that should be anywhere 3 to 4 days or so, and then make a bull reversal in the daily momentum, while the daily and 3 weekly momentums are bullish and for a probable continuation of the bull trend and confirm that we've completed a corrective low. And we can call it a completed low back here in September, or if you want to call it here, a more complex low. The point is, everything's going to be pointing up. Now, remember, we're not forecasting, we're trading. We're identifying, given the technical position of this market, what would be a setup to then take a specific trade. It'll be following the next daily momentum bull reversal, which is probable. It was probably not going to occur until the latter part of next week, if not the first part of the following week. But boy, this is a market, gold, silver, and the GDX, to be alert to in the days ahead. It'll be, I think, a great setup. It's finally resolved itself to give us an indication that indeed this correction is complete, and we're probably on the verge of a breakout for a consistent trend. By the way, if you trade Forex, the euro is looking almost very similar to this technically. So consider the euro also the next cycle in the daily momentum for a long trade. Of course, the dollar is looking like it's going to be negative now for some time. So keep those two in mind as well. Okay, that's it for today. Robert Miner over and out. Take care. Wear your mask. Be nice. Help folks out. And keep healthy. See you next week.